Let's go. Sunita, all yours.
Perfect. Thank you so much, Alan. Thank you everyone for joining us today on our session 68. This is our last session for October. We will be back in November and we'll give you that calendar a little bit later on. So thank you so much for joining us today. As you all know, this is brought to you at no cost because of our funding from SBA and also the Governor's Office, GoBiz. So the webinar today is at no cost, and so is our advising. This is brought to you by the Finance Center as well. We specialize in getting loans for small businesses. Scott Rogalski, if you've been here before, is the director. I am the associate director, and we have Kyle Roseman that's joined our team, and he is a lending specialist. He'll be with us on Wednesdays going forward. So you will get to see him too. We'll help maybe in the next week or two. He will also present. So guys will get somebody else in here. So the agenda today, well, of course, we're going to go through disclaimers, COVID and fire EIDL parameters, PPP applications, required docs for forgiveness. We did go over this last week, but I got a ton of questions in regards to this after this webinar. So I wanted to go over it again. Maybe I went over it a little bit too fast last time, so I'll go over it a little bit slower. And also we have an update on California Rebuilding Fund. It's not much, but it's something, so of an update. Also, SBA is going to give us updates today and upcoming webinars and Q&A. You can put your question and answers, or you can put your questions in the Q&A box, and Kyle is going to help out answering those, and we will answer some towards the end as well, live. Disclaimer, change this up a little bit. This information was correct when the presentation was created, which is last night and this morning. Please do not hesitate to apply for EIDL. EIDL is still open. We don't know how much longer it'll be open, so if you're on the fence, you should apply. There is no more EIDL Advance. That's no longer available. The PPP did close out. They are not accepting any new applications, but we are now in the forgiveness phase. Here are the parameters for COVID-related EIDL and the fire EIDL parameters. There are two different applications for both of these disaster loans. So I want you to know that just because you've applied for COVID EIDL, it is not the same application. It is different. You can find it at the SBA website, and if you need guidance with that, we can help you. So just reach out to us. You can always reach out to us via phone, 833-ASKSBDC, and we can get you with an advisor that can direct you on exactly what is needed and how to apply. So for the COVID EIDL, the parameters are different. The rate is at 3.75 for everyone except for nonprofits. Nonprofits are at 2.75. The term is a 30-year term. There is a deferral of payment for 11 months. The interest does accrue though. So on the 12th month, you will start paying payment and interest payments. If you decided you wanted to start paying before then, you can. You would just hook up with SBA Disaster Servicing and they would be able to assist you with that. Collateral and personal guarantee, there might be one, collateral for over $25,000 loan and a personal guarantee for anything over $200,000. And we can get into that more for your situation. If you're still applying, we can help you with that. It is unfortunately not forgivable, not like the PPP. This is not forgivable. This is a loan. Allowed to spend. What can you use the money on? So you can use the money on operating expenses, interest, debt payments. What is not allowed? You cannot use this money as an expansion loan, paying off full amounts of loans or tax liens, or as a down payment to buy a new building. And I add this because this is a situation that I'm running into right now. Our people are saving that EIDL money and they want to buy a building, which is great, but you cannot use the EIDL funds to do that. So EIDL fire, your rate is going to be 3% for anyone that's not a nonprofit and 2.75 for nonprofits. It's up to a 30-year loan. So it really depends. It's dependent on each loan. There is a 6-month interest, 6-month deferral, and interest also accrues. Collateral is about the same. So collateral for over 25,000 and a personal guarantee from all that have 20% or more ownership. Forgivable, it is not a forgivable loan. You can use it for working capital to cover all ordinary business operating expenses, and this is also not allowed here, expansion or refi of long-term debt. We're going to jump into the PPP EZ application. This came out, I believe, in June. This EZ application is, I believe that the majority of the people can use this. Majority of our borrowers are going to be able to fall into this and use this. So if you can fall into any of these 3 categories. The first one, if you're a sole prop, independent contractor, or self-employed individual with no employees, you can use this document. Or if you fall into number 2, did not reduce salaries or hourly wages of employees by more than 25% during the covered period. And along with that, did not reduce the number of employees or the average paid hours of our employees between January 2020 and the end of your covered period. But you can ignore this, the reduction that arose from an inability to rehire individuals who were employees as of February 15th, if you, the borrower, was unable to hire someone similarly qualified for that position. So it went unfilled on or before December 31st. Also ignore reductions in employee hours that the borrower offered to restore and the employee refused. We did have a lot of people coming to us, borrowers coming to us, clients coming to us stating that their employee does not want to come back, or they were not able to work full-time because of childcare or other reasons, or they got another job, or they're just not going to come back. There was all different reasons, but you should have that documented via email. I know people are asking if they text you, copy the text. I think that something is better than nothing. So that's the second reason you would be able to use this EZ app. So we're going to go into the third reason how you can use it. So continued. You did not reduce annual salaries or hourly wages of employees by more than 25% during the covered period. So it's the same as the number 2, but the addition is you were unable to operate during the covered period at the same level of business activity as before February 15th due to the compliance reasons with requirements established or guidance by these different entities here named listed here. I do want to let you know that this webinar is available on our not Q&A, but the on the other platform. So that way, where are you going to place this webinar?
So the webinar is live on ASKSBDC.com and also is recorded, and you can see so it takes about a day or so to get posted up there, but it'll end up on the resources there. But if you go to our YouTube channel, and I'll post a link to that in just a second, all our webinars are there. For all of these Ask SBDC ones are there.
Perfect, because I know this is a lot of information to take in right now. So this way you have it in written form. And this information comes directly from the application's instructions. So this is not something that I have created or made up. I did put it into a little bit of a condensed form, but it comes directly from the application instructions for the EZ app. So let's go into the 3508 Simplified application. This just came out a couple of weeks ago. So this is for all entities. If you're a sole prop, any entity, you can use this if you receive $50,000 or less. It requires you to certify the use of funds were for eligible purposes. Actually, all of them request this, that you sign off that you used it for eligible purposes. And then this one just asks how many employees you had at the time of your PPP application to your lender, and then your forgiveness application. So those are the only things that it's really asking you. And there's about 5 or 10 questions if you need assistance with it, but this one is pretty simplified. We can definitely help you with that. What documents are required? If you don't need to submit it, you should still have it. They are stating that you need to have these documents. I would keep them probably the same amount of time as you keep your taxes, for 5 years. You just never know when you're going to be asked for this information. So you want to keep all the documents related to payroll and related costs, employee benefits, utilities, rent, and mortgage interest, if that's what you use the funds for. If you didn't use the funds for anything else but payroll, then keep payroll, and if you use for benefits, then keep those two. For the full application, if you happen to fall into the full application, you will have to fill out page 3 of the application first and page 4, which is a Schedule A. So that way you can fill out the rest of the form. The applications are located at SBA.gov, funding programs /loan/coronavirus relief, and a lot more other options, paycheck protection program. We can help you find it, so you don't have to memorize this. Just reach out to us, and also at hometreasury.gov.
I'll pop those addresses in the chat as well for folks.
Thank you, Alan. So the other part of the PPP, it's confusing people, is when is my first payment due? So as long as you submit the loan forgiveness application within 10 months of the completion of the covered period, everyone, probably if you received it early on, you had the 8-week covered period. And if you received it later, you probably have a 24-week covered period, because it wasn't offered until a few months down the road. So that's the end of your covered period. So you as a borrower don't have to make payments until SBA figures out what the forgiveness is and what loan is owed. Now, if you did not use it accordingly, the purposes as PPP required, then yes, that's going to turn into a loan, and you should probably talk to your lender and start paying on that sooner than later. If you already know that is all going to be a loan, you can talk to your lender about that. The other thing about the lenders is at this time, I don't believe are up to speed on collecting the simplified application yet. A lot of lenders are putting this on their platforms and creating this from scratch. So at this point, some lenders are not ready yet to accept applications. I believe that some lenders are also waiting to see if there's additional legislation. At this point in time, somebody has already asked if we're going to talk about, what's out there with the what ifs. We can't talk about the what ifs because we just don't know what's going to end up shaking out. There was things in the beginning that never happened, 6 months ago. So we don't want to give you misinformation because it has not yet become law. Legislation has not been passed yet. So until then, at this point in time, we don't know what's going to end up getting passed. Our hope is that 150 and under, that would be great for a lot of people, but we don't know that at this point in time. The application forms that you have, the forgiveness forms, says that it expires on 10/31/2020. That is not correct anymore. It has been extended out to 12/31/2020. It seems like a simple thing to change, but this has already been approved by, I'm sure, many people at Treasury and at SBA. So to change that date is probably going to be a little bit more difficult than you would think. So just know that this application is good until December 31st, 2020 at this point in time. They may extend it, we don't know, but at this time it's good until 12/31/2020. Let's go into the California Rebuilding Fund. I know that Scott had talked about this weeks back. And I believe it was stated that it was going to start the week after. So as you know, if you've been with us for a while, things are just a little bit slower to get going. And the reason is because they want to make sure that this has all the information that they need to be able to execute it smoothly. So as of Monday, it is still to be determined when the portal is going to fully open for pre-qualifications for this fund. There's nothing, I've heard what the interest rate is going to be, but it's not finalized. So I don't want to give that information to you. There's so many what ifs or unknowns at this point in time. I just wanted you to know this right now because I know we had stated probably a month ago that this should be coming out. Hopefully in the next couple of weeks, this will go live. So what they need is you will put your information into a portal. Then they'll match you up with a lender. At this point, there are 12 lenders and 4 of them can lend throughout the state. Some are city specific or county specific or region specific, but there are 4 that can lend throughout the state. The lender will then reach out to you and request documents that are required for their loan package. If you are thinking about trying to get a loan through the California Rebuilding Fund, please reach out to us so that way we can get you prepared to be able to go through this process smoothly. Getting your loan package together, takes the most time. If you've ever done a loan, you know that takes the most time. So if you start now and in 2 weeks they're up and running, you're going to be way ahead of the game than everybody else. So your loan can go through much faster and quicker. And we can help you package your loan up. Okay, enough for me. Now let's go to SBA Support. And I believe Carrie is here today because we were talking earlier. So Carrie Ellenwood, the Deputy District Director, is here. And I believe David Castaneda with the Economic Development Economic Development Specialist. And Carrie, please take it away.
Thank you, Sunita. I will do that for you. Okay, good morning, everyone. I wanted to share with you some information hot off the press here at SBA. We have the year-end lending totals for our programs in our regular areas as well as our emergency disaster loans and the Paycheck Protection Program. So let me start off at the highest level, and that the Paycheck Protection Program nationally provided 5.2 million loans with worth over more than $525 billion to our small businesses in the country, as well as $3.6 million loans for $191 billion were made directly from SBA through the EIDL loan program, which, as Sunita mentioned earlier, is still available. In addition, there were an additional 5.7 million EIDL advances worth $20 billion that were made by the agency to support small businesses. In regard to the PPP loan program here locally in Sacramento District, our lending partners made 49,798 loans for over $5 billion with an average loan size of $106,392. We could not have done the extraordinary work without the efforts of our local lenders who participated in this program. And this really focuses and shows their commitment to our communities and the small businesses that we serve. In the Sacramento District, we also had excellent performance by our certified development companies who increased the 504 loans, and our 7A loan program as well also performed with $522 million to our small businesses. So in regard to these programs, we're very excited for the help that we were able to give our small businesses. On all cases, it's a good news all the way around. And I'm happy to share that with you today. I also want to let you know there have been some additional notices that were sent out last week regarding the fires. Most of the fires are out at this point. There is one still up in Siskiyou County that's only 83% contained, but the firefighters are working hard on that. For those fire disaster economic injury loans, it's a different portal. Once you go to SBA.gov, you will see where you need to go to apply for those loans directly with the agency. That's what I have for today. I'd like to turn it over to David so he can give you an update on our webinars.
All right, thank you, Carrie. Again, the SBDC is one of SBA's largest assistant, educational, and consulting programs nationwide. We do also have, to support all the good entrepreneurs and small businesses, some of our other resource partners like SCORE, the Women's Business Center, and the Veteran Business Outreach Center. If you take a look at all of their calendar of events, there's a lot of good webinars. Probably every day or multiple times a day, you can see and attend a lot of good webinars going on at no cost. What I'm going to do, I will put on the chat box the San Francisco SBA District Office calendar of events website and the Sacramento District SBA Office calendar of events website. That way, at those two locations, you can look at all of those resources, which includes, again, the Small Business Development Center, SCORE, Women's Business Center, and the VBOC. Again, all of them do provide free consulting services to entrepreneurs and small businesses. And also for the veterans, the Veteran Business Outreach Center, they're there to assist also. The other thing I want to encourage all of you is in your local area, your county, sign up for either the Women's Business Center, the SBDC, SCORE, VBOC electronic newsletters, because there's a lot of good information in your local areas that might be happening. For example, there's other loan programs out there that we're aware of in various counties to help during this COVID relief. There are also continuing grant opportunities that I've been seeing. So take a look at those local resources. Again, the SBDC, SCORE, Women's Business Center, and VBOC, sign up for their e-newsletters. And again, you can plug in with more of the resources that are in your community. That's it for me. Thank you, Sunita.
Thank you, David. Let's see here. Alan is going to go over our upcoming webinars for November.
Hi, folks. Well, obviously, we're getting into holiday season. And we've got a fantastic webinar from Holly Steele, who is a member of our restaurant program advisor team. She is literally a world-class hospitality trainer who's worked with some of the largest and best-known hospitality names. And we are so lucky to have her doing what she does, what she used to be paid a fortune for, doing for free for us and for you. So she's doing a session on Monday about adding hospitality to takeout. So it's her 12, it's actually 13 tips on if you've had to pivot if you've got a restaurant program, or I assume this would work for anything that's where you were dealing with customers in-house in your premises, but you're now doing either takeout or curbside pickup. Still great ways you can serve your customers and bring that exceptional service level back. The other three things you're seeing on there are part of our new startup series. So we have starting your business and financing your business. These are ones where we've run them before, but not terribly well publicized, and now running them at a regional level. And planning your business is actually a pilot. So the first time we're going to be running this. So for the starting, it's going to take care of anyone wanting to know about what they might want to know about starting a business. I guess many of the people here are already running their own businesses or trying to keep them going. Planning is great for everybody, because even if your business model has probably had to change, so a chance to redoing your business plan, and we'll be looking going in depth on the lean planning canvas as a way to do that. And then financing. This is talking about funding options for startups and standard expansion. This is not emergency funding that we're covering really here, either COVID or fire. It's like standard 504 loans, SBA loans, that sort of stuff. And that's just what the region's doing. All our centers are still going gangbusters on doing events. So we've got 16 different centers. Most of them are doing 2 to 3 events a week. So whatever you want to see, there is something on that topic somewhere on our calendar. So have a look on the SBDC Events Network calendar, and you'll see all the different things that all our centers are doing. And of course, because the vast majority of the webinars anyone can come to anything, which is the silver lining in this pandemic. All right, that's it from me. Back to you, Sunita.
Thank you so much, Alan. And yeah, I think that's a great point to make. So if we may not have a regional webinar that goes over something that you're really needing, then check out everybody else's calendar and you can join that webinar, which is the great thing for us to have these on Zoom. And you can also look at a library of things that we've done in the past, and that should be coming out in the next few weeks or so.
Hoping to launch it next week, Sunita. Hoping.
Yay!
Yay!
Awesome. Great news. So the library, I love that we're able to do that. So that way you can go back and look at some things. Of course, this ASKSBDC Wednesdays is progressive. So to go back may not be the best use of your time because things change all the time, not as much as before, but they do change. So going to our most recent videos is probably the best thing for you to do. Or reach out to us, call us up. So the Wednesday webinars, we're going to continue our series with Case every other Wednesday for November. So next week, Case is going to be with us. Please have your COVID related questions ready to go. I believe that the gentleman, the attorney that deals with the insurance will be back next week. So have those questions ready and any other COVID related questions ready. And I keep saying COVID because that's what they can speak to. And if they don't have the answer, then they're really great about taking that information and getting the answer back to you. Wednesday, the 11th, we're going to continue our disaster loan updates as we do every week. And then cases coming back, we'll still do the disaster updates with them. Wednesday, November the 25th, there will be no webinar due to the holidays, due to Thanksgiving being the next day. We want to give you guys all a break so you don't have to think about this. So here is a little advertisement for Case Force. This is information that you can go online and get information from the lawberkeley.edu. You can also join our webinars from there. You can get some good information from there as well. So here we go. This is how you can contact us, 833-ASK-SBDC. If you're not a client yet, we can sign you up right away. Bree is here on the panel today, and she is our lead person with the call center at 833-ASK-SBDC. So her and the team would be happy to help you. Also, if you have questions, you can email us at loans@asksbdc.com. And also in Spanish, you can just go to espanol@asksbdc.com and we'll be happy to help you. We've answered, let's see here. We've answered 14 questions. Kyle, thank you so much for being in the background and helping with that. There are some questions that we left here so that we can try and answer with the assistance of SBA, or maybe we can all kind of put our heads together here. So Lynette is asking, does the SBA loan get recorded on my credit? So I'm assuming that you're talking about the EIDL loan.
Good morning. Thank you, Sunita. Yes, they will pull your credit to obtain information regarding your qualification for that loan. And then in regards to it being reported out on your credit, I believe it will be. I don't have a definitive answer on that. I do know, though, that with it being a federal program, if you do default on that loan, that's a debt that you won't be able to discharge in a bankruptcy. So it's very important that if you get to a point where you're having difficulty making those payments, that you contact our disaster loan area and work out a payment plan for yourself on that loan. Thank you, Sunita.
Thank you, Carrie. Here's another question, and this has been asked time and time again, and we had a different answer previously. Like I said, things do change, and I'm not sure, Gurdeep, so I'm going to ask the question for EIDL. Can you apply for a second EIDL loan if you were already approved and received an EIDL?
What you can do is go to the PDC recon at SBA.gov, and you can request an increase in your EIDL loan. you'll need to make that request, give a justification as to why you want an increase on your EIDL loan, and they will consider it at that point. It would be considered as an increase, not a new loan.
Okay, great to hear. I wasn't sure if they were still doing that or not, Carrie, so thank you for that.
Yes.
Hey, can I interject for a second? Carrie, I got a question for you. We
Yes.
get a lot of clients who are in service business of some sort that have really low COGS. And so oftentimes they get funded for something that doesn't quite cover their loss. How do you suggest we go about that? Because it seems to be pretty strict on what COGS are. And I'm just curious on if you can shed any light on how to handle that situation.
Well, anytime they receive the economic injury disaster loan and it doesn't cover what they need, the vehicle that they have to ask for reconsideration is that PDC Recons email, and follow up with them with their concerns and their areas that they're not funded enough for in regard to their small business. So I don't have access to that system in terms of the internal workings of it. I do know, though, that the PDC Recons is the way that they can get additional funds or request. Can't guarantee, but they can request. Thank you for that question.
I've put the PD Recons email in the chat for folks.
Thank you. And then I'll go backwards so that way we have it. Here we go. So that's the SBA's information. Down at the bottom is the SBA disaster contact info. Tim Stanley is asking, and I'm assuming it's for you, Carrie, because he's asking, does she have handout with this data?
Which data is he referring to? What I reported, I'm just preparing that SBA news release to go out to our partners, probably right after this meeting. That'll go out to our resource partners and our lenders.
Perfect. So Tim,
we don't have, I'm sorry, Sunit, I just wanted to say, we do not have data down to the individual lender level available at this point.
Okay, thank you. I hope that answered
You're
that.
welcome.
Tim. So Alan, this is for you. Mary is asking, the QuickBooks training was canceled, or David, is there another one scheduled? These webinars are great.
So we didn't have a regional QuickBooks. So the chart, it could, if that was an SBA one, David might be able to respond to that. But if it was a local center who were doing it, just reach out to that center.
Yeah, many times the centers will repeat a class, but if you want to, again, take a look at the other resources, again, there's many out there, SCORE, the Women's Business Center, VBOC, and the other SBDC offices. You can look at their calendar of events, and most likely you'll come upon another QuickBooks class. So that's what I encourage you to do.
Thank you, David. Lori is asking, PPP client received very small PPP. When she pays herself the PPP funds, does she need to stop certifying with EDD for 8 weeks so she's not double dipping? Lori, yes, you're not supposed to double dip. You're from what we've stated in the past. But if they lump sum themselves the 1 week, as you know, I'm assuming they're Schedule C, then I believe that could be a possibility, and then they can start collecting again, or going forward. So that's it for questions right now. We answered 20 questions. Sorry, we've got one more here. Lynette's asking, can PPP loan be used to pay down mortgage loan on personal property? Absolutely not. It cannot. You can pay interest for your mortgage if that is where your business is located, but you cannot pay down a mortgage loan for personal property with that money.
Of course, though, once you convert that money into income, then you can use it for whatever you want, as long as
Correct.
it's payroll.
Yeah, so as long as once you received it as payroll, then of course you can use those funds, but you can't directly pay for it that way. Lori's asking again, PPP. So if she takes it as lump sum, she can claim it for 1 week instead of over 8 weeks with EDD. I would assume so, Lori, but I would reach out to EDD to make sure that that's going to be okay with them. Because at the end of the day, they're the ones that are going to be certifying that information. And from what we've heard, they may not, if people are double dipping, they may not get caught now, but it can be down the road. So just be very careful, client, to be very careful about what they do.
That would be tricky because if you paid yourself the equivalent of 8 weeks of payroll for 1 week, I think that would go against the raise restrictions in the PPP. So I think that, I don't know, Sunita, what do you think about that?
It's really dependent. So if she got a small amount for PPP, Lori, you would have to really look at all of her documents and see what that is. Now, if she, the other thing I'm concerned about is PPP money. It's been a while now. So is this what happened in the past? She should have received the money, you know, they stopped taking applications a while ago. So you're gonna have to look a little bit more into that, since it's not a new loan fund, it's an old loan fund. And did the client already do it? So she may have to work a little backwards on it. So there's a lot, unfortunately, there's a lot more questions. It's not an easy answer to that. So if you want to reach out to us, Lori, you can, and hopefully you have the document so that way you can look at them, when she was funded, how much money she received, look at her Schedule C. Lynette says, thank you.
Sunita, if I have a minute, I forgot one thing that I'd like to share with everyone. Is that okay?
Absolutely.
All right. Well, thank you. So next week is National Veteran Small Business Week, and I just want to let everyone know that if they go to sba.gov/NVSBW, there are events every day, webinars that are on the national level. They're on Eastern Standard Time, but there's some very good tips and assistance there for our veterans in the community. They have transitional services to starting your business on Monday. On Tuesday, they have a webinar on entrepreneurial training for veterans. On Wednesday, they have government contracting information about veteran set-asides. On Thursday, they talk a little bit about leveraging your networking resources. And then finally, on Friday, they're going to have a webinar on financial strategies for women veteran entrepreneurs. So really, really good webinars for our veteran community. And I encourage all of you to, if you're a veteran, please join us in these. And if you know a veteran, please let them know about it. Again, and you can go to www.sba.gov/NVSBW. Thank you, Sunita. Thanks for letting me share that.
Absolutely. Thank you, Carrie. So Tim, an advisor of ours, is asking for Carrie, has the SBA published any stats on PPP loan forgiveness numbers or loans or dollar amounts yet?
I'm just sending that information out today in a news release. It
Okay.
does talk about the PPP loans nationally. I've localized it for our Sacramento district. Other district offices will be putting that information out as well. As far as the forgiveness, I don't have any official numbers on those that I could share at this point.
Okay, perfect. Thank you. Mary is asking, sorry about that, Carrie. I received PPP, but did not include myself in the payroll figures. I then applied and was granted PUA. I did not double dip, but kept two separate accounts, I'm assuming. Cool. Yes, just as long as you don't receive the income at the same time. Jesse, an EIDL question. Can I use EIDL to pay off private loans? It was due during the covered period. As far as I know, Jesse, no. You cannot use the EIDL funds to pay off private loans. If it was the bridge loan, Yes.
Yes, that's correct. And if he was making payments on a private loan, then he could continue to make those payments. But as you said, he would not be able to use the idle funds to completely pay that loan off.
Right. If it was an SBA bridge loan that you had, you could have used the idle funds to pay that off. But if it's not the bridge loan, then you are not able to use that money. But if you use part of the idle money to pay yourself and then in turn use that as income, then turned around and use to pay that off, then that was your income to use, like Kyle said, the way you wanted to use that. So there we go. Carrie, Mike asked a great question last week. And what the question was, and let me think if I can remember it exactly. I don't think I can, is what are the pitfalls that people fall into in regards to applying for EIDL? What are the major pitfalls that people are doing?
I think, thank you, Sunita. One of the challenges that people have applying for the EIDL is the way that the loan is structured. So they need to understand their revenues and their cost of goods sold in filling that part of the application out. The other thing is that if they take this loan out and then decide they don't need it, for example, there's a process they need to go through to return those funds. And I believe we have the contact information for their servicing center on one of our slides here. I can't see them at the moment. So they can contact disaster customer service at sba.gov and see if they can assist them with that information if it's not on the slide, Sunita.
We have,
and then the other thing. Oh,
sorry, we have servicing at El Paso. Is that the correct one?
Yes, that's the correct one. Thank you.
Okay, you're welcome.
And then, as I mentioned to the other question earlier, is that they understand that, this is a government guaranteed loan program or a government loan program. And so that is a loan that will not go away from your credit file with the federal government. So for example, if you have an EIDL loan and you can't make the payments and you don't make a payment plan with SBA on that loan, there's the potential that then you won't be eligible for any other 7A guaranteed loan or any other federal loan programs. In addition to that, likely the IRS will, if you have a refund coming, they will use that refund to apply towards the outstanding balance on the loan. So it's very important that, you take the time to make sure that you're communicating with SBA if you're having difficulty making payments after the 12 months of deferrals are up, to get that set straight with them beforehand in advance. That way you'll be able to protect your credit score, protect your ability to access other federal programs in the future. Did that answer it, Sunita?
Yes, absolutely. I think that that's great information. I think last week too, you had stated that some of the things that end up delaying your application for EIDL is that you provided the incorrect email address. You may have forgotten a letter. Please double, triple, quadruple check that information, because that is the only way that they're going to be able to reach out to you is via email in the beginning. And, they may be able to call you, but that just delays this application process for a very long time. Yes,
thank you, Sunita, for reminding me of that. That is correct. The email address that you submit is very important. In addition, if you're submitting at the point of submitting your bank account number, like Sunita said, double, triple, quadruple check that, because if there's any error in that, the funds will not come through to your account. We won't be able to find you. And it's unlikely that you would get a phone call back if those are the errors that are on your application, because it's going to be in with the millions of other loans that are being processed. So yes, please do be very careful on those 2 points in your application. Thank you, Sunita.
You're welcome. Thank you. And also keep your application number. So those are some of the things that you should really keep check your junk mail also for information from SBA. It may go into your junk mail. Check there. Double check when you're filling out your documents. You don't have to do it quickly. You know, you can save it, you can print it, make sure you've gone through everything and double checked all the information. This is also something for the California rebuild. I believe in New York, they've done something similar. One of the pitfalls that they found out is that people are not providing their correct information. They're missing a number on their email. Their phone number is not correct. They're also not keeping the lender information. So the lender is going to send you information, not the rebuild fund. So these are just some things, just being really cautious about what you put on applications and the information that you put there. So that is something, so that way it's more streamlined and it's easier for you. If you have any questions, give us a call. Our phones have slowed down and I just don't know why, because we're waiting for you guys to call us with all your other questions that you forgot to ask today. So, or in our previous webinar. So we are waiting for you and we will get back to you either same day or next day. And let me put our info again up on top. So we've answered 28 questions with the help of everyone here, mostly Kyle, because he's typing away and answering all the questions for us. And we're here for another couple of minutes. We'll give it another couple of minutes. If you don't have another question, then we can go ahead and call it a day, but we'll stay here for maybe another minute or two to see if you can think of anything that you would like to ask us.
So normally under it being California, I would normally be thinking about congratulating any Dodgers fans, but this is Northern California. And so specifically, yeah, I'm pretty sure that most of the people in Northern California kind of mixed feeling of whether that a California team won, but it was the Dodgers.
All right, it wasn't a real playoff.
It wasn't a real playoff. And I'm personally a Cubs fan, so you know we got into the playoffs and immediately removed. So it wasn't a real playoffs. It wasn't a real
baseball.
Yeah. We've had some questions come in.
Yeah, Kana, it looks like Kyle did answer your question. I can read it out loud for you if you happen not to be at your computer. It states that this wouldn't work out in the way that you are wanting. It would just shorten the life of the loan and probably not by that much time. I would use the money for productive uses in your business. Yes, for operating your business. If you wanted to, you can go to servicing and ask them how to go about doing that. But honestly, that money is for you to keep your business going. So what's your daily expenses for the business? That's what that money is for, is to keep your doors open. And like Kyle said, it's probably going to be minimal. You have 30 years to pay it off. You could definitely pay it off earlier, but you have 30 years to pay it off. Wow, look at that.
You know, start talking about baseball and that's what happens.
Oh, okay. I was going to say I stepped away for just like a second from this screen and now it's okay. So Con, thank you for the question and I hope that answered your question. Neil is asking, I received an EIDL loan earlier this year, but didn't accept it since I didn't want to add another liability, but now we do have a need. Is it possible to apply again, even though we declined last time? So Anil,
so that would,
yeah, go ahead, Carrie.
Yeah, I'm sorry. You would have to go back through that PDC recons. That's the only way to reach back out and see if you can get the funds, even though you declined them. Is that what you thought, Sunita, or do you have more information?
No, that's exactly what I thought. It's not a new application. You would just go back and ask them to reconsider your request. And you're probably going to have to provide additional information now, like a 4506T and also tax returns. So from my experience,
that's correct.
That's what they're asking for, Anil. So just get those ready, and that way you can send it off at the first request. Kana's asking, but is it legal
This
to
is
use the money to pay interest? Sure, you can use it to pay your bills, and that would be a bill. But like we said, is that really the best use of your money? So we would really, you should contact us so that way we can look at your profit and loss statement, and we can look at what your projections are for the next year or two and see if that money is better spent there or in other places. Alex is asking, is the PPP money to pay for 8 full weeks, even if the covered period is 24 weeks? You could pay up to 24 weeks. Most lenders have transferred it to 24 weeks. In the beginning, it was 8 weeks, but somewhere in between the start of the PPP to, I believe, the middle, I can't really remember the month anymore, it changed to 24 weeks, and most lenders are good with the 24 weeks. So if you can't pay yourself the full amount, you can still pay yourself some. But there are stipulations if you are a business owner, if you're Schedule C, of how much you can receive. So give us a call and reach out to us and we can go over that because you're still bound by the maximums.
Can I just shed some light on Kana's question again about the paying off the interest? You know, it's okay to do it. It's basically okay to do that. There's no issue with paying off the EIDL loan early, even if it's with EIDL funds. It'd basically be like returning some of that money. But one thing to keep in mind, I mean, if you really want to get in the nitty gritty of the financial analysis of the situation, let's say you got $100,000. That means that first year you're going to accumulate 3,000. Would that be? Yeah, it'd be 3,750 or so dollars in interest. But that is then going to be amortized out through that 30-year period. So it becomes really a minimal impact on your business. And I would just be cautious whether that's really the best use of it. There is no problem. You could return the entire loan if you wanted to. But when it comes to like paying off the interest specifically, that would be tough. And I'm not sure if it's actually possible. Like Sunita said, you might have to call servicing and they're going to be super busy. So if you want to get really into the weeds with it and pay off the interest for that first year, I mean, really the answer is, and we've said it over and over again, is really, is it worth it? Is it worth it for you to do it? You can pay back the loan early. There's no problem with that. But is that the best thing to do? That's a question that we would have to really dive into your business, see what you're doing, see what your goals are. And so that might be something you want to reach out to our call center to really take a look at how you're moving forward with your business.
Thanks, Kyle. And Kana, just be careful also if you're going to return the money. As you see, there's lots of questions here on how they can get that money back. They've decided that they didn't want the EIDL money. Now it's going to take an additional amount of time, and there's no guarantee that that money is going to be there for you to take. So there's lots of things as you as a business owner to think about. So we have 2 more questions and we're almost done here. So I want to make sure we get these answered. Noelle is stating, how do you recommend we start the loan forgiveness process for both the PPP and EIDL? EIDL is not forgiven. EIDL is a 30-year loan. For the PPP, Noelle, I suggest you reach out to us so that way we can figure out which application you can use because there's 3. You may fall into the Simplified or the EZ or the full app. So let's hope that you fall into the EZ or the Simplified. Reach out to us and we'll help you figure that out. Fernando is asking, I am a sole prop with no employees. I received a loan amount of $14,100, but my 2.5 months worth of 2019 compensation is about $10,000. My 24 weeks payroll covered periods ends in October. Can I pay the amount that exceeds the 2.5 months worth before submitting my PPP loan forgiveness? Yes, so you could spread out that amount within the 24 weeks, but like I stated before, I'm sorry, the exact numbers, it used to be in a slide, but I don't have that. The exact numbers, you cannot go over the exact numbers. So Fernando, please reach out to us so that way we can give it to you. Unless Kyle and Carrie remember those numbers off the top of their heads, I just can't remember it at this point in time.
I would make sure that you're also maxing out your forgiveness with the utilities, rent, and interest on mortgage payments too, because it seems like there's more money there that you can get forgiven if you're only taking into consideration your payroll.
Yeah, so Fernando, reach out to us because there is a calculation that is actually on the application itself. So if you go there, you can look at the
60,
application.
40.
Yeah, and it does have it, but just reach out to us. And I'm sorry, I don't have that number in front of me right now. I apologize for that, but reach out to us at 833-ASK-SBDC and we can get that for you.
That's true. That's I believe that's 60-40. So 60% of it needs to be spent on payroll, 40% needs to be used for those other expenses. And based on your numbers, it seems like that's within reason for what you have going on. I don't know, I just roughed it in my head, but it seems like that remaining 4,100 is about 40%. Might be a little bit more.
Yeah, in fact, 60% of that 14,100 is 8,460. So if he's paid 10,000, he's well within that. He's well over the 60% paid to payroll. So the rest is
yes, and the sole prop is a little bit different. So reach out to us because you could probably use all of that towards your payment. Sorry, towards your payroll. So for yourself. So reach out to us so that way we can walk you through it.
All right, it's 11:31.
Awesome.
No questions.
Sorry, it's late.
Just go before anybody else asks any more questions.
Well, we would love it. So you can do that. But we will see you next Wednesday. We will have Case with us, the Attorney Coalition. So we look forward to seeing you next week, Wednesday. Thank you for your time. Appreciate it. Bye, everyone. Thank you, everyone on the call today. Alan, Kyle, David, Carrie, and I hope I didn't miss somebody else. Brianna, thank you, everyone.
Thank you.
Bye, everybody.
Thank you, Sunita.
Keep safe.
Thank you.